Oh, all right then. It says we're connected. We are on the World Wide Web right now. So, hey guys, what's going on? So, I don't know about you guys, but I said the C word earlier. The dreaded C word that usually this time of year we hear all about. That's right. I had a Cadbury cream egg and it was scrumdiddlyumptious. But yeah, so since everybody's freaking out about the great toilet paper shortage of 2020, mostly self-induced, of course, I can understand why my fellow Americans seem to have such irritated bowels and additional bowel movements and stuff. My thoughts and prayers go out to everybody that has had IBS at some point. It can be some very nasty business, but as far as everything else that's quote unquote corona related, let's actually take a look at some of the actual effects of what we see about going on and see if we can't get to the bottom of this. So I was listening to the White House press briefing earlier, and then kind of towards the end of it, a reporter asked a question that was not engaged with by the president. It's basically the markets that just closed. And markets, I believe it's the Dow Jones Industrial, was down about just shy of 3,000 points, a little under 13% there. So what's happening? Number one, does this surprise anybody? I mean, I heard folks talking about Black Monday and stuff for, I don't know, the past couple of days and everything. Um, I mean, really, this shouldn't really come as a surprise. So what is the market? And again, starting off, I am not a licensed financial advisor. That being said, I'm just giving you my opinion based upon my time for working for a mutual fund managing company as well as studying business in college. It's basically, as far as I know, what the market is, what the general price of a stock is supposed to be, is the discounted future of all future dividends. So basically, the market rate is okay, let's say average rate you make 5%, your company's making 10%. Okay, you're that much higher than the market. Is that expected to continue indefinitely into the future? Okay. And then there's a whole bunch of other calculus, yada, yada, yada. And that's what it comes to be. What are we seeing? Okay, we're seeing the federal government starting to step up. A lot of these major changes are actually coming from the state and commonwealth level. We're seeing the different governors starting to impose different restrictions. I'm hearing about curfews in New Jersey, this, that, and the other thing. I know that a vast majority of businesses within the service sector here in the Commonwealth of Massachusetts, they're basically shutting down. I went out last night for the obligatory like St. Patrick's Day beer. It's like, all right, one of my friends, she's just like, oh, this is my last shift for like the next 3 weeks. There's a number of folks that literally are getting laid off for a couple of weeks just out of an abundance of caution. If all of a sudden you have thousands upon thousands of businesses shutting down, you have consumers not going out there spending money. I mean, this isn't really a surprise, and this is affecting across the board here. You combine that with the fact that the service sector is getting completely walloped right now. Because I remember, what was it? You go back even like a month or two ago. What was the Dow? I kind of stopped tracking it after a while. It's probably like 29,000 or so. Closed a little over 20,000. I mean, that's in my opinion. Again, I think a lot of the market is kind of a bit overflated there. As far as housing and everything goes, I mean, market does always go in cycles. There are definitely contributing factors to the cycle. And what does the market hate more than anything else? It's uncertainty. And we got a lot of that right now. Just log on to any social media. Just scroll through your feed right now. People are kind of going a little nutty bananas just because it's that fear of the unknown. It goes back into just our adaptive fight or flight reflexes. There's actually a concept, it's known as the orienting reflex. I believe it was a Russian psychologist that discovered it. And what happens is when you're exposed to a novel stimulus, like all of a sudden, let's say you saw a one-eyed, one-horned flying purple people eater. All of a sudden, you're like, oh my God, what's going on? It's like, should I run? Should I fight? Is it going to eat me? Can I eat it? Maybe we can go out for a latte and talk sports or something. Well, unfortunately, all the sports seasons are closed, but you get what I'm saying. This is the thing. When we go into those modes, we don't know what to do. When we've been through those similar situations for a while, we start to get normalized. That's why in so many different sports, uh, I would assume within the military as well, you have very specific hard training. Why do you do training in those drills? So it becomes second nature, so you don't panic. Unfortunately, or fortunately for us in this case, not everybody is compelled to serve in the military or go through certain things. That's what previous generations have fought tooth and nail for. Now, I believe we can absolutely do better. So, what we got here? We got uncertainty within the market. If folks don't know what's going on, a lot of folks pull their money out. As soon as some folks start pulling their money out, other folks start pulling their money out. And it's kind of like there's this thing called kind of large block investing, where if Stanley or Joe Smo just invests like 7 units into whatever it is, it's like, okay, whatever. But all of a sudden, if you see like JP Morgan Chase or somebody, and all of a sudden they're moving like 3 million shares here or there, the market takes a look and say, oh, do they know something we don't know? So then you'll kind of get either panic buying, panic selling, because everyone kind of starts going the right direction. So other folks are like, all right, those folks are overreacting, and they start to buy low because they realize the market will likely go back up as long as the company doesn't completely tank. Another major factor here, and I actually do have I should probably actually address the articles that I actually brought up here. This one is from Business Insider. So as we can see, it's the biggest drop since 1987 as Fed emergency actions failed to calm coronavirus fears. Here's the thing. They're injecting a bunch of things, but when we keep on hearing that we're talking about more or less a lot of the country is going to shut down for 2 weeks. Now we're maybe 3 weeks. People start hearing the months of July and August, which, again, worst case scenario, yeah, it could be through there. But at the same time, that's when they're likely thinking that the vast majority of this virus will have swept through the population and will essentially have it under control. Will we need such strict things until then? They're not saying no, which everyone has in the back of their mind, and as we all know from Universal Truth number 6, our minds tend towards the worst place. So the other factor too is oil in of itself. Let me see, was it in this one or was it the other one? Yeah, oil basically has dropped below $30 a barrel, which, there we go. Oil showed as much as 29%, even dipped below $30 per barrel. Wow. I don't think it's been that low since I was in maybe middle school, maybe high school, probably high school. I remember one day it was like $27 a barrel, and then within probably a decade, I remember it being like was it 100, 140, 146 bucks a barrel at some point. Here's the thing. You got a bunch of countries within the greater OPEC alliance. They're kind of just dumping oil into the market. You got more supply there because, I mean, they're trying to make money and everything too. Yeah, I mean, that's just economics. You have the sheer fact the United States of America is energy independent. Thank you, President Obama and President Trump. That's the thing. It does drive prices down. And then as we can see here, Treasury surge sending yields lower because, I mean, well, if you're injecting $1.5 trillion in liquidity into the economy, yeah, that's going to happen. And then standard things, gold and everything like that. Gold. It slumped as investors for cash amid the market panic. That's actually very interesting. What that says to me is this is likely also, and again, I'm not an advisor, a lot of folks just want to make sure that they have cash for their businesses and stuff to survive. So rather than just trying to make a quick buck, it sounds like people are kind of trying to invest in things to keep themselves safe, their property safe. That is interesting. That is interesting. I'm going to need some smarter minds than myself to figure that out. But as we can see here, who is this? This was blah, 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 blah. Will Rind, the founder and CEO of Grant Shares, told Business Insider in an interview, "We definitely have more room to fall." Oh, that's absolutely true. Here's the thing. That uncertainty, folks go to the worst possible place. Yeah, of course you're going to sell off and everything. if all of a sudden in like 2 or 3 weeks it's like, all right, well, it appears that we've got the vast majority of the hold. Within 5 days, we're going to open everything up again. So if in 1 month we open it up, and even the president touched upon this in his address, it's like, oh, look, the market, the market is going back up, because once we get the all clear, people are going to get kind of sick and tired of being crammed up, and they're going to go out there and they're going to party like it's 1999 with a 2020 flair. So, and again, that's my opinion. I've heard other folks say that, so we'll see what happens. Let's pop into CNBC real quick. So, here's what happened to the stock market on Monday. This is from Fred Imbert. So, the Dow Jones Industrial tumbled 2,997 points. Oh, that number makes me kind of tickle a little bit on the inside. I think it reminds me of 97. That was a good year. But yeah, it's just shy of a 13% close. NASDAQ composite seemed to fall right about in line, a little over 12% there. Yeah, I mean, again on Monday after news of the Federal Reserve cutting rates and launching a stimulus package failed to assuage coronavirus concerns. Again, you got that chaos factor there. The Fed announcements agreed with a sell-off. The Fed cut rates to basically zero overnight and announced an asset purchase program of at least $750 billion. However, investors look past that news as the number of coronavirus cases jumped in the United States and around the world. Bottom line, investors want to see the number of new cases to start coming down before re-risking their portfolios. Here's the thing. If you're going to invest in a bunch of companies and stuff at a given price, and all of a sudden that company is shut down for a month, maybe even 2 or 3 months, that's why the market is addressing that. It's that uncertainty. If all of a sudden we know, got a 99% handle on this, all businesses will be open next week. Boom. In my opinion, the market will surge right there. We haven't had that yet. Let's see what else we got. Apple and Facebook take a break. Here's the thing. I have a friend that works for Apple. They were already giving them emergency sick pay and everything like that for this occasion. They're a multi-billion-dollar company. I think they're going to be fine. We might not be able to get in the Apple store for a little while. I mean, I would have liked to get some new AirPods and stuff like that because I think I lost mine at PAX, but you know what? That's a first world problem. And Facebook too, even Google and YouTube, they're giving us the heads up. I saw YouTube on Twitter earlier. They're like, oh, well, you know what? We're not going to necessarily we're going to have more algorithmic management. And they straight up said, more videos will be taken down even if they don't violate the terms of service. But they were straight up about that. I can respect that. That's the thing. If things that people don't like are going to happen, if you at least let them know, it assuages their fear. It kind of just puts them a little bit more at ease, because at least in their mind, rather than, oh my God, this or that. So people will still complain and stuff like that, and we got to be fair. I mean, they have the right to complain if they didn't violate the rules, but at least folks are trying to be more straight up with folks. Is there anything else in this article? No, that was actually a very short article. Just final thoughts. Here's the thing. The market is correcting itself. I kind of felt the market was probably a little overinflated because, well, let's face it. I mean, you got dude man as President Trump. He's been known as like 15 years on The Apprentice, the cider. Oh, we got a savvy business person in the White House. Yeah, he got elected. Stocks immediately tanked, but then they went right back up and everything. And just, we got to be fair. I did study business, and at least from what I can see, aside from just the shit posting and stuff like that and just pissing people off, a lot of the things are in line with just standard business procedures. That is going to help the market. Now, we can always argue on which way we would like certain industries to go and everything, but all I know right now is healthcare and the medical system seems to be on everyone's minds. That, as well as paper good production. So, hey, thank you all for watching. Long live the elbow bump. Peace out, everybody.